Hey everybody, welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had a great trading day. It is the day before the Thanksgiving holiday in the U.S., and like every day before the Thanksgiving holiday in the U.S., the markets did a whole lot of nothing. So let's go ahead and roll into it. For those of you that are new to the channel, we do the same thing every day. We look at the same 8, 10, 12 futures markets, and we leave the lines on the charts. The reason we leave the lines on the charts is so that you can see how levels are created, what they do, and how they form. So let's go ahead and dive into it. So looking first at the S&P. Yesterday, when we did the video, we talked about a little 15-minute area right in here where we had old resistance, which became new support. Did not quite get down to that level yet today, and the markets have wrapped up for trading for the day. Tomorrow with the Thanksgiving holiday, we're going to have markets that are closed. So this level, I don't believe, is going to obviously make entry. We're going to leave this thing on the charts. I think it still has some validity to it. The Nasdaq, we talked about a potential breakout above this area here. We got a little breakout, and then price came back down to the pivot low. Did not get below the pivot low, below the breakout. So technically, if you took the breakout long, you should still be in this position. You might want to have that thing closed out over the holiday, as it is as there's really just not a lot of movement on the breakout in the Nasdaq. Crude oil, we talked about yesterday. There's really not been a level that we've been a huge fan of. Maybe this area right in here. I'm not a big fan of how the time of day that it was created, but the fact that it was this resistance area here coming kind of back into this range could be a clue for a potential opportunity. I'm going to leave it off because I don't like that it was created in the 5, 6 o'clock hour. But just kind of keep an eye on that one. And, if your risk tolerance allows you to take that, it might be something for a reversal when price does indeed come back down. Gold did have a small time frame level set up in gold. When I go to a 15-minute chart, what you'll notice is that price came into here and just immediately stalled out, right? See that stalling before price came up? Tried it again, and then it failed. So this level did not work out in gold. So if you took this one and got stopped out, it's a fairly small level, fairly small loss. I'm going to remove this one from our charts. Remember, anything that's in purple is always going to have a lower probability of success because it's coming off of a lower time frame. Really, nothing was created today to make me want to go out and find something new. We still do have this area here, which is where we got our last reversal in gold, that is still valid, although I'm going to change the line style here to a dashed line, because a dashed line means we want to wait for price to come into it and then get short as it comes back out. We're not as confident in the level, and we're not as confident because it's already worked one time. Taking a look at our bond markets. So in our bond markets today, we had another level. Now this one, if I go to a smaller time period, you'll see that this level did indeed work out and then come right back down to its opposing fair price area. So just about to it, not quite, before then coming back up into it, failing, and then eventually it went through the level. So if you're very aggressive, and I will tell you, I was not sitting in front of the computer today, was not sitting in front of the markets today, so there was no way for me to adjust the stop and to talk about adjusting the stop on the Twitter feed. But this is one where if you're pretty aggressive, you're probably adjusting that stop pretty quickly because of this opposing fair price area away from that zone. So this one, obviously, I'm going to remove from that area, as it did not make our cut. Looking at Aussie, so the Aussie dollar has just about come back up to our breakout that we had a short on the last time that the Aussie was in this range. We took the short breakout out of here. We've come back up to it. I do like, now one thing that was formed today that we will keep in mind is this area right here. So I will keep this area in mind. I see this as a good potential reversal when price comes back into this range. So there's something in the Aussie. Now, this is an example in the euro. Notice it's a dashed line. Price came into the level and then never came back out. So there's no reason for us to have gotten into this trade. This is why we use the dashed line. The dashed line tells us that we're only going to get in if price comes in, and then we get in as it comes back out. It did not come back out of the level. So in this case, there's no reason, if you followed your plan, you didn't lose any money on this trade, and this level had a lower probability, which is why we put the dashed line around it anyway. We've got this area right up in here, which is a which is coming back into this this prior resistance of the past. So I'm going to leave that thing be. Nothing else has been added in the euro. And last and certainly not least here is the Canadian dollar. Nowhere near our breakout level in the Canadian either. Looking at our last two, and I'm just going to look at the British pound and the Japanese yen. Now, the British pound, take a look at this. Now, this is why I drew the lines here and told you that there was some pinching that occurred. But this is why I don't typically take the breakout on some of these triangles unless they've got a very specific setup. Look at what this did. This gave us a move straight down before then going straight up. This is designed to take out people that are trading breakouts improperly. And I believe that. I believe that this, I believe that there's people out there hunting for stops, and this is the case. And so we talked about how this was pinching and we expected a movement, but I didn't say that we would want to be taking a trade on the breakout from there, and that's exactly why. It doesn't have a blue line. I talk about the blue line as kind of our breakout opportunities, and it just didn't fit that criteria, and that's a great example as to why. Now, what that breakout does do is get us a little bit closer to where we believe there's a potential for a reversal, which is further to the left. Go back a bit further, and it's off of this little region here where I think that we could get a reversal. So now, mind you, we're coming up into that reversal with a fair amount of momentum, so be aware of the opposing fair price area as we come into that zone. And then in the Japanese yen, we can see another strong rally higher. This one, I will tell you, I feel like I missed out on a breakout potential here with the yen, breaking out above this area here. I think that there's going to be a chance on a retest, possibly even this area there, for sure this area down here in the Japanese yen. So I'm going to highlight this as a potential, if indeed price does return. So all in all, today was a slightly lower probability day to trade, which is why we saw some of our levels kind of get blown through. That's okay as long as you've got your protections in place. Hope everybody has a great day. I will not have a video coming out tomorrow as it is the holiday in the U.S., and then I'll try to get one out for Friday. Until next time, hope everybody has an absolutely amazing day. Do me a favor, if you like the channel, subscribe, share it with your friends, tell your neighbors, tell your dentist, tell your buddies, whatever it needs to be. If you guys need anything, give me an email, chuck@iiefinancial.com, and I will see you soon. Thanks so much. Bye-bye.